Welcome everyone to the Consultancy Growth Podcast. I am Joe Omani, a professor of consulting, and very, very excited to have, I think, the founder and owner of the largest consultancy we've had on the podcast, and actually one of the largest founder-owned consultancies, founder-run consultancies in the world, Matthieu Courtecuisse. Who founded a long time ago now, Sia. So, Matthieu, thank you so much for joining us. It's such a pleasure to have you on board.
Thank you, Joe, for having me.
You must be a busy man as well, because it doesn't look like you've slowed down at all over the last 20 odd years.
I think the world is changing so fast that that's the world which is creating so much uncertainty, and that's also exciting at the same time.
Can I ask, when you first started Sia, did you have any idea? I realize some people start with a plan to grow and sell, but did you start with a plan to get anything like the size that you have got over the years?
I would say like the creation of the company was like in two-step approach. First of all, you mentioned like Sia is one of the largest firm in the world, which is still led by founder, right? So, but it's also one of a singular topic is I never worked for any other consulting firm, okay, which is not that common, and most of the consulting firms that are like boutiques and all the stuff, it's also fair to say that most of them have been created by people coming from the consulting industry. And it was not my case. I was 26 years old when I created the company. And at the very beginning, with two of my friends, when we started, we were having no plans, right? So just the fact that we were having the chance to have clients and projects, just as a starter. So when you are like 25 years old, you are not thinking always like long term, and at the same time, it was pretty much our case. We were pretty much like the risk adverse factor was not really in our mind. We didn't care about anything. So we were just having very, very attractive projects to start with. One was related to my very, very short career before creating Sia, but was working at the World Bank. And we were having the chance to have like a few projects just to start. And we, it was very opportunistic for 1 year and 1.5 years. But it came to a point like after 12 months, we were having already 20 people, okay? And so it was the time for us to think about what was the real plan, the long-term playbook. And for me, it was very clear. It became very clear that Sia would become the company of my life, my whole professional life, because I felt like being a consultant was like very, very. It was some kind of a extraordinary journey, and I was feeling that the market was having so many opportunities to grow, and it was at the same time so much balkanized that it was possible to build a global platform. So quite rapidly, I was saying like, okay, this market is led by the major clients, Fortune 500 type clients. And if you want to be credible working with them, you have to become global. So very rapidly, I started to think about like the long-term play because it's a people-first business, and to become global, it's one of the very, very hardest thing to achieve in this business. And I was quite clear on the fact that it would require at least 15, 20, 30 years to build such a platform, right? So so quite rapidly, but it took like 1 year, 1.5 years before confirming this intuition. And then I started to work always on 3-year strategic plan, and I've been conducting the firm always based on this to have like the real intention to reinvest most of the the benefits, the profits coming out from the firm, because it's also obviously the consulting business is like an OpEx business, but
Yep.
at the same time, if you want to become global, in that case, it's becoming more CapEx approach. And that's making the difference between the companies that are staying in their status of boutique consulting firms as opposed to the ones that are capable to really grow and to go outside of their comfort zone. And when I'm saying like comfort zone, it can be like your home market, it could be your home capabilities, your home personal network in the end. And if you want to develop like a real platform, then you need to invest. And it became quite rapidly clear to me that it would require a lot of investments over the years. And to develop like the culture at the global level, it's very challenging, I have to say.
Yep. Yes, I can imagine. And it gets harder, especially with international expansion. And once you start to employ managers and then managers of managers, it's hard to keep the same culture, but also retain control of the culture, I guess.
Yeah, plus, I mean, like, started in France, and if you go, like, we have been setting up an office in Japan as a good example, and I can tell you, like, very few firms are taking this challenge. But we started like in 2009, I think, in Dubai and in Saudi Arabia. And when you are just coming from your home market, right? So and you know, like if you are staying in Paris, it's just you can meet with many decision makers, executives from the CAC 40 firms. We are all living in the same districts. We are all coming from the same schools, right?
Yep.
But if you want to go and build your network in Saudi Arabia, to work like on Vision 2030, as we do today, you have to work a bit, and I can tell you, you have also to invest in long-term relationships. So I knew quite rapidly, but it would be a very long journey. I'm still in the middle of it, to be honest. I think after 25 years, 26 years running this firm, I think hopefully I'm in good shape and in good health. So I think it's going to require a lot of time to achieve this primary objective I set up like 25 years ago.
Wow. It's great to have. I know you talked about 3-year plans, but having that sort of vision of an international consultancy as the backbone and also an enabler of success is great to hear about. As you touched on international expansion, it would be interesting because you and I both know a lot of firms who tried to break America and failed. It was too expensive, or they had no brand name, or partnerships fell through. Or even just moving next door. I know lots of UK companies that have tried to expand into France or Germany and have failed because it's difficult and requires investment. Other than the investment that is needed, do you have a playbook for international expansion? So have you had a series of gates or stages that you typically go through, or does it depend by the location that you're going into?
I think it's, if I may say like this, I don't think it's very complex to understand. The thing is, it's more like an execution topic. And it's not a matter of money, it's not a matter of anything else. It's more a matter of like how much the CEO is investing in his personal time. So being on the ground. In the US, one of the major factors is to be distinctive in the mix, and is like the founder factor.
Okay.
And it's very cultural in the US. Like you can get a lot of respect. You can come from any country in the world, but having this specific status, being not just the CEO, but to be the founder, it's changing everything. Okay,
Yep.
it's changing everything when it comes to recruitment to be attractive in the discussions, but also you have to commit your personal time into it. So we have been in the US for 13 years, and I decided immediately after we created the firm here in New York, to spend at least 1 week per month in the US, starting first in New York and then in multiple markets. Today we have a presence in 12 different cities in the US, and by the way, it was becoming harder for me from France to commute to all these markets, because
Sure.
from Paris or from London to go to New York, it's pretty like it's as if sometimes it's harder to go to some other places in your home country.
Yeah.
But like, so it's like it's a nice commute. But when you are going into the Bay Area, which is key for us in our development in the US, from France, from Europe, more generally speaking, it's pretty hard, right? So because you have like 9 hours of time zone difference, and then you have like even just you are not just landing in San Francisco. You need to go to Palo Alto. You need to go to San Jose. You need to go to multiple places in the Bay Area, and it creates like more difficulties from a pure logistics standpoint. But to make it clear, if you want to convince clients, if you want to convince the best talents in the market in the US, you just need to dedicate a maximum of your time, which is doable. And if in some cases, and it's common to see that for startups, if you look at unicorns from Europe that are successful in the US, most of the time they have like 2 or 3 founders, and one of them is relocating in the US very rapidly if the
Sure.
company started before in Europe, okay? Because that's the founder factor anyway, and it works for any business in the end, especially the ones that are people first. It's very, very, very important to dedicate this. And it's not always possible, like because it means from a personal standpoint, if you are, and it was my case, I've been running the French operations until 2023. So if you are running your home country, and at the end of the day, we were a bit more than 1,000 people in France, and I was running our hub of operations from a day-to-day basis. But in addition to this role, I was also commuting in addition to that in the US, like all the time. So
Yes.
you need to be, to work in a
Yeah,
way
sure.
which is, you need to be efficient, let's say, and you need to accept this. And it came to me like that's why also in 2023 I decided to relocate in the US because the idea was to transform or to convert the US market for us as our top market. That's going to be the case over the next 2 or 3 months. It's going to become like our top market. And it's normal because given the size of the US market as opposed to any other one in the world, that's making a lot of sense. And there are some other specifics in the US market that are making so important to be there. I can elaborate on that if you want, but it's very important for any consulting firm to have a very, very strong presence there. If I refer to like a Publicis, which is similar in terms of like a business at the agency world, the US market is representing 40-50% of the total revenue, as opposed to 7-8% for France. And and that's, I'm not saying it's going to be the case for us, but like it's very clear that for most Western businesses, the US market is definitely the most important one. And you have to be there anyway. If you want to become a global platform, if you want to just to be a niche player in your home market, that's fine. You don't have to go there because, it's requiring a lot of time, investment, but more importantly, a lot of dedication in terms of, time you want to spend.
Yep. I think that's a really good challenge for owners and CEOs of firms. I know Steve Newton at Elixir has spent a lot of time in the States, and they've been pushing US expansion quite heavily. But I think your challenge around actually, this is the leader's job to get over there, to drum up business, to leverage his or her reputation is something that not all leaders want to do, of course.
Yeah, because it's so nice to stay at home, to have like, to meet, because also it's harder to get, prospective meetings especially in the US, one of the difficulties, and I can also elaborate on some specifics of the US market, but to get an MSA in place when you want to work with very large companies, if you want to work with JP Morgan, if you want to work with Google and some others, it takes sometimes 2 years to get an MSA in place. It's the level of bureaucracy in the B2B2 business in the US is quite high. Okay,
Okay.
if I compare to other countries, right? So, in the end, in Europe, sometimes it's easier, right? And even though, like in the consulting market, I've seen that for the last 20 years. Now it's harder and harder to get MSAs because there is some direction coming from the buyers to consolidate their vendor bases, right? So that's where we are. But like 10 years ago, even 10 years ago in the US, it was already very hard to get an MSA in place. I will not name some of our clients, but like even sometimes it can take like up to 3 years. You need a certain level of long-term commitment if you want to consider that, because the return won't be immediate anyway. Okay, it's not possible. So, and that's also one of the reasons why you can see so many acquisitions in the consulting market in the US. It's because there is a real barrier of entry when you want to work with very, very, very large companies in the US, especially when it comes to financial services, which is heavily regulated, and there's a specific stamp for consulting services in the mix. One of the other factors to make it successful in the US is you need to rely on your home, let's say, or your legacy client portfolio. If you have no clients in your home market, could be London, could be France, could be Germany, that are, happy to work with you in the US market. And most of the European companies, they have a very, very large presence in the US because it's very common to see, like, if you go to pharmaceuticals or banks or whatever, like the US market is generally speaking one of the largest market for them. And they have like a certain level of autonomy to spend on consultants in the US. And you need to convince some of your clients coming from your legacy portfolio to work with you in the US. If you are not capable to do so, you cannot be successful in the US. So there are a couple of criteria in the mix that you need to. It's like a checklist if you want, but it's also very important, because if you have nothing to bring to the table in terms of distinctive capabilities or client relationships, it's going to be hard to success.
Yeah, great. I'd love to delve in a little bit to the M&A bit in a second, but just before I do, because you're of the size now, I mean, you're around 500 million revenue, whether euros, dollars, you can adjust it as you wish.
It's a bit more. It depends on like US volatility now.
Sure.
US dollar volatility.
It depends on the exchange rate.
Yeah.
So how have you got? So you're now, and you have been for some time, competing with the big established players that have been in the boardrooms for a long time. You know as well as I do, very often these relationships are very tight and very personal. How has Sia shifted? So I guess this is a question about your value proposition and your differentiator compared to some of the big players that you would be competing with.
Well, for sure, when it comes to distinctiveness, I think the market has also been changing a lot over the last 15, 20 years, right? So at the very beginning of the foundation of the firm, the philosophy was very simple. We wanted to build an industry expertise-driven company, right? So to have a very strong capacity on each vertical we wanted to build. So starting with banking, but like it's not banking at the end of the day. It was more like a regulation in risk and compliance and finance for banking. That was really the niche that we started with, like with a lot of density in terms of expertise. Same, we started immediately with energy or related to the deregulation in the electricity and gas markets across Europe, a bit like Baringas, very well in the UK. So immediately, like it was really these factors, okay, to have like a maximum of density within the industry expertise. And then over time, we have been adding our capabilities, starting with digital transformation that came quite rapidly in the mix. And that became for us more than 15 years ago now, around data transformation journey, right? So, and and now I think we are coming to a point where it's could be a turning point for the consulting market overall. Because it's not only the nature of the capabilities we are selling to the clients, but also the way we are engaging with them on more like on a business model, which is more outcome-based, potentially subscription in the mix, how to combine a hybrid workforce between consultants and agents. So it's going to be a very interesting journey for the next years. But I think the other day you shared with me a deck that you are working on with your students, and you posted it on LinkedIn very nicely. 10 years ago, um, I proposed to the market the concept of consulting 4.0 that was more like augmented consulting. And because I was feeling like more than 10 years ago, the potential mix between consulting and AI, consulting and data, to be more and more, let's say, data-driven or AI-driven. And I think we are now getting the benefits of all this work we did like 10, 15 years ago, because it's requiring a lot of IP, it's requiring a lot of testing and learning approach. It's requiring some investments, which is not you are not getting the returns like immediately on this. So you need a long-term playbook again. Same with the global platforming approach. When it comes to AI, we have been investing in our platform like more than 30 million. Okay, so when you are developing this type of platforming approach, you need again, because you need also to convince the clients, because it's not just a matter of distinctiveness. It's just like the clients, they don't understand spontaneously, let's say, why strategic consultants are coming to them and like talking about AI. Like 10 years ago, it was very bizarre to go to clients on this type of playbook. And now it's, obviously, there is even like some kind of AI fatigue in the boardroom. Sometimes also they are fearing about like the impact of AI in their own businesses. But but I've seen like the shift in the market like 2-3 years ago with the ChatGPT effect, I would say. Few consulting players 5 years ago were really investing in this. I could name some of them, but it was like we were just a handful of consulting firms really believing in this, especially at the CEO level, because I know some of my peers, and it's fair to say that I have an AI engineering background, which is not like the regular background for, let's say, which is more like an MBA and all stuff, right? So, I think I said like a top priority for us that data and AI was very distinctive in the mix. And so a couple of years ago, and especially going back to the US factor, when you are coming to the clients and say like, we are capable to have like this approach on data, I think you can create some distinctiveness in the mix, especially, and I think it was one of the specifics I wanted to mention to you today, is like more than 40% of our revenue in the US is generated with the Max 7. Okay, so like the US market, like any other consulting market in the world, banking is always representing 25-30%, even 35%, even like London is even more than 35%, which is going to the banking industry. Okay, in the US, it used to be the case, but it's not anymore. It's not anymore because the big tech companies started to work with consultants only 6-7 years ago.
Okay.
Like there was like, the consulting ban philosophy coming from Jeff Bezos, right? So that was one of our standards in the mix. It was like no PowerPoint decks, no consultants. And it was like really clear. But even Amazon today is using more and more consultants. And I'm not talking about AWS. I'm really talking about like the core business of Amazon. There is still one ban, which is with the Musk environment, which is very hard to penetrate, I would say. Even though we have been working a bit with one of his companies, but it's very tough. But when it comes to other like major tech firms, they are using extensively consultants. It was not the case, and given the acceleration of the tech industry in the GDP numbers of the US, and even though they are spending less, if you are in terms of if you can allocate a percentage of their revenue into the consultant budget, it's not like a bank. But given the fact that these companies are growing like 25, 30, 40% a year. The evolution of the consulting budget is following this trend, okay, in that specific segment.
Mm-hmm.
And so if you want to have like a long-term ambition in the US market, you have to develop relationships with these companies, okay?
Sure.
And I decided like back in 2019 to invest a lot and to dedicate also some of my time to make sure that we were capable to work with them.
Yep.
And most of the stuff we are doing there, like they are launching new products, new services all the time. They have now to face with heavily regulatory threats. They are becoming like multi portfolio businesses, right? So, and it's very vast, and so the complexity which is coming with this is also creating some opportunities for the consulting industry, and that's one of the major investment we've made. And also when it comes to transformation within the big tech firms, data is always at the core of anything, because these companies, they have the chance to be like data and AI natives, and the access to data and the relationship you can have with how you design workflows, processes, products, services, how to work even on remediation plans for any new regulation which is implemented. So it's wonderful. I mean, that's one of the best places to be in,
Yes.
because from the concept to the reality, there is almost no gap. Okay.
Yep.
So that's very interesting. And now it's representing 40-ish% of our revenue in the US.
Wow. Okay.
And it's going to be more and more, I think, in the future, right? So, and it's no offense to other industries. It's just the reality of their,
Sure.
when you look at the capex, right? So of these companies, it's massive. And I know some of our peers working there as well. And same, we are very few consulting firms that are having a strong presence there. You can have a look at that. There is like no boutique consulting firm capable to really work with tech firms, because you have to be global as well.
Yep.
And immediately you have to be global, which is creating, by the way, some issues for pure US consultancies, because most of them are very local ones. And they have difficulties to go abroad from the US, right? So that's also, it's even more difficult for them, more than for European consulting firms, because quite rapidly, even though you are just staying in 2 or 3 markets maximum, you become like rapidly a multi-domestic in Europe. It's not the case in the US. Like, the market is so big that I'm not saying that you can be lazy, but there is the appetite to go outside of the US when you are born in the US is limited. Okay.
Yes. Yep. Yeah. Great. There's a saying in the UK, probably in the States as well, about music bands that I knew them before they were cool, and I think that's and so when a band becomes cool, everyone says, well, I knew them before they became cool, and I think that's a bit like Sia and AI. It's your heavy investment in tech and digital and data and AI seemed to precede. And at the time, it seemed like, I remember reading about Consulting 4.0 and thinking, this is risky. And then, 3 years later, everyone's jumping on the bandwagon. So I can see that put you at a great advantage. But I'm also interested, because for listeners that don't know, you're personally quite heavily interested in AI, both from a business and client perspective, but also for Sia, but also for society as well. And you've written a lot in this space. I'm interested, we could talk about this all day, and I realize your time is precious, but I'm interested in how you see the developments in AI, especially over the last year or two, and likely to be the next year or two from now, impacting Sia's strategy. There's a lot of talk about the shape of consulting firms moving from a pyramid to a cigar, etc. How you think, what the big impacts you think will be on the consulting industry, I guess, internally as opposed to services for clients?
Yeah, so it's hard to make the difference like between like how we serve the clients and how we are designing our capabilities. But and as you know, Joe, I mean there are so many shades of like consulting firms, right? So and the impact would be a bit different. Like if you are focusing on just pure strategy in market
Sure.
research, or if you are more like in a transformation space, or if you are more like exposed to IT implementation, right? So the level of impact can vary a lot depending on the positioning you have. Obviously, the major consulting firms are in all spaces, right? So we're gonna be hit by all impacts, right? So,
Yep.
and it's bringing some it's a double effect, right? So you have like a cannibalization of some services that are existing, but also new opportunities that are also creating in the mix. And yeah, I think there is a question mark related to the how we are shaping the organization. Is it more like a diamond, hourglass, or whatever? I don't know. What I know is um, it's going to be definitely related to be AI savvy and at all levels. So I don't think it's going to be easy for, like, let's say, partners, even partners, when I'm talking about partners in our industry. Now, if you have to engage with clients on AI topics, if you have like no background in technology, no understanding of how it works, no personal experience in the mix, it's going to be harder and harder to be credible, right? So to help the clients just to anticipate the needs in terms of organization and all the stuff which is related to this. And so there is a very strong challenge for all consulting firms to upskill the management level. Okay, that's I think the primary challenge. More, I know there are tons of papers around like for the people just fresh out of colleges that it's going to be hard for them to find a position in the consulting market. Yeah, there will be some changes, but it's also related to the capacity of universities to provide to the consulting firms, uh, junior people who are data and AI savvy at the very
Yep.
beginning, natively. So
Yep.
I think there will be some adjustments, but I'm not worried long term for the people who are just fresh out of college to find positions in the consulting market. I don't think there is a risk for this specific generation right now, okay? But I don't think long term it's going to be an issue because it's just like the consulting firms that they have also to adjust their services to the new demand and new specifics in the demand, which is clearly like we are moving toward more like outcome-based engagements. We are also coming to it's not very shiny, but that's also the reality. There will be more and more managed services in what we do,
Sure.
especially when it comes to augmented consulting. It means like it's a new kind of outsourcing at some point for some of our clients. Okay, and yeah, so there will be changes there, and we have experienced some services in the mix. So typically, I can share with you one or two examples. If you want to do like automated regulatory watch at a global scale for a bank, well, some mid-sized banks they don't have the capacity to develop their own AI stack on that. They don't have the capacity to go to a software platform because it's hybrid. It's requiring like a good knowledge of and a good understanding of the industry expertise. And at the same time, you need to automate some of the work, right? And so that's part of the augmented consulting work. The fact is we're going to sell it in a very different manner, and we start to see that it's going to be more like a subscription, like managed services.
Yep. Okay.
It's going to be the same for market research. If you really think that all the market research will be done by robots by 1 or 2 years, you are exposed to potentially difficult aftermath. I think if you are just thinking that with just 2 or 3 prompts out of ChatGPT, you're gonna get the full report of for market research for one business. I don't know. Yeah, it's an accelerator for sure, but can you just squeeze the human factor in the loop? I don't think so. Okay,
No.
so the consulting firms that would be equipped in the mix is going to work. There is a risk also of cannibalization of some software platforms that are capable to be at the certain level of customization, which is quite low. If it's low, it's going to be it's going to get out from the consulting market. If it's like 30-40% of the outcome, it's going to stay within the consulting business. So it's just a matter of like where we position the cursor between automation and customized approach. Okay, but at the end of the day, for the consulting businesses, it's going to be related to the digital assets you have and the distinctiveness you have in your own data sets. Okay, if you don't have, if you have no data sets, no IP, so it means you just have to provide some, some time and material to the clients. I don't think it's gonna work, a lot
Yep.
over the next years, except if you are like a, like a guru, or if you have a very, very strong background in one industry, but it's not part of the consulting market I'm targeting, right? So which is like a very, very specific niche in this market. But if you want, like, if you are talking about real consulting businesses, being owner of digital assets and data sets, it's gonna be like very, very important, and fairly it requires like a lot of vision. We have been building like data sets for the electricity markets. We started like in 2010 to build this data. Okay, and it's impossible to have them. I know just one competitor having exactly the same data sets. I will not mention them, but
Sure.
well, I can tell you it's Watson, right? So that's the only competitor we have.
Yep.
And by the way, sometimes even the people who are observers of the market should pay more attention to IBM and what Watson is doing in the mix. Watson X now, okay? Because, and especially in the US, it's working pretty well.
Okay.
And by the way, if you look at the market cap of like the major consulting businesses, like IBM is leading the race by far.
It's interesting. Yeah. Yes.
Yeah, and it's not as well identified in Europe because IBM has a very has much stronger position in the US.
Yep.
But like Watson X is paying, I pay a lot of attention to what they do. Obviously, we have been also investing in R&D like billions. So no other consulting firm did that. And some of it has been like wasted for sure.
Yes.
But we still own some very, very strong IP.
Many years ago, I worked with IBM, helping them put together their technology people, some of whom were Nobel Prize winners, with their consultants who wanted to sell things. And you get them talking, and it's always been quite a challenge for them, ensuring that their tech and their consulting business is tied up nicely.
Yeah, and it's exactly that. So the problem is, in the end, the cultural factor, right? So you have to have this hybrid model, and that's where we are trying to be better, right? So we are very humble because given the impact of AI on all businesses, you have to stay humble. You have to take a couple of bets as well to invest in some areas, to do some capex, to invest in some data sets, and some of them are not working, some of them are working, right? Right now, we have the description coming up around agentic e-commerce as a good, very strong topic for the next 2 years or 3 years, right? So in 3 years, we're going to have to reinvent the whole e-commerce world, but took like 20 years to build. The previous one. And now we have 3 years to rebuild and to reinvent e-commerce. Okay. So we are in the middle of this with a pure agentic approach. And to be successful, to help our clients, we need to build data sets, or we need to partner with companies that are bringing some data sets in the mix. So this approach of being like an open architecture in how you can become more distinctive in the mix is a challenge from a cultural standpoint for all consulting businesses, including Sia, right? So that's part of the cultural transformation journey we need to face with, because it was easier in the past to I'm not saying that you are siloed, but it's just like it's easier to just work internally with your staff, and you have the partner, the traditional model. I think it's an easy playbook, right? Now you have to invite to the table some partners giving an access to data sets, or because you cannot build all of them.
Yep.
It could be academia, it could be tech partners, it could be software platforms, it could be competitors sometimes, or companies in other spaces, right? So, and that's part of the evolution of the consulting market.
It strikes me, and correct me if I'm wrong, but I think Sia realized this and culturally has found it easier than the big firms, because at the big firms, even now, you still have partners who want to sell in, 100 graduate MBAs with on day rates, and they do quite nicely out of it. And I think, speaking to some of them and knowing some of them, they're struggling with the diversity of business models and revenue generation models that I see that Sia has been doing for some time.
Yeah, I think first of all, I think it's related to the level of conviction of the CEO in the mix. It's also related to the entrepreneurship and innovation mindset you have as at the core of the culture of the company, which is more our case, I think. And there's some kind of a cliff factor also in the mix. So because, yeah, if you ask me like today, it's still like let's say 75, 80, 85% of the business, which is still achieved in a very traditional way. We know that there will be a cliff at some point. But as long as it works, it's fine. Okay, you can still continue. You can see potentially a decline in your book of business, and okay, you accept that. So yeah, 2 years ago you were delivering like 100, then it's 90. Now it's going to be 80, and it's still working, right? So it's not as good as it used to be. But the problem is at the same time the market is changing, and some people in the mix. If you feel like you have just 5 years left in the market, you can say like I don't need to change anything, okay? And I don't think it's a bad trade-off, right? I'm not saying this, but it's just if you anticipate what's going to happen for the next 10, 15 years, you need to be prepared for this kind of disruption, and that's what we are trying to do, right? So just to stay ahead of the curve.
I've got one more theme I'd like to ask you, or in fact one and a half, but I'll cover the half later. So the theme is around mergers and acquisitions. Sia has made some great acquisitions, and has added a lot of revenue from that. I have seen a lot of acquisitions, more by private equity, that haven't gone very well. You've clearly either got some secret sauce or you've got some great people working on your M&A team, but you've made a lot of acquisitions, but you don't seem to have had the cultural disruption and integration disruption, and lots of people leaving because they're unhappy. So what has worked? What lessons have you learned to make the acquisition playbook work at Sia?
Yeah. So first of all, you mentioned the quality of our M&A team, and it's really it's a really important factor. So I would like to name Sandrine Caro. She has been running most of these operations for the last 10 years, and she's really at the forefront of running the next ones that we are currently working on. She has got like the major trust factor coming from Blackstone as well in the mix. So that's very interesting. To go back to your point, is first of all, what we did for the last 10 years or so was to really to do what we call bolt-on acquisitions, right? So it's more like a tactical approach. So we are just targeting one pocket of expertise, because that's the reality also of the market. Most of the companies that are on the market are recognized as very strong in one area. Could be one market, one expertise, or one capacity, whatever. But most of the time, these companies are just in a niche player in one field of expertise. Okay, so what we propose to them is more like to integrate our platform and to give to them the opportunity to have an access to more clients in the same area globally. We are giving to them the access to do just more. And most of the acquisitions we made over the last 10 years have been successful because we have been helping them to transform the businesses they used to have. And when they are going to the market and they want to stay long term, when they are making the founders are making this decision to move to another platform, it's because they feel like they have the selling glass. And in reality, well, we have been reviewing tons of decks, and people are projecting business plans that are crazy, like to grow by, I don't know, like the CAGR is like 20% or whatever.
Sure.
But like the reality is, for most of them, that's what I'm telling to the guys who are on the selling front. If you are really believing this, you should not sell. Okay,
Yeah.
because
Yeah.
so if so there should be something else, right? So in the mix. So sometimes people are getting close to retire and all the stuff. Okay, but the reality is there is some kind of selling glass, and what we are proposing to them is to jump into a new world, having an access to more capabilities, and especially over the last 5 years, to come to the table with AI capabilities has been always a major change, because most of the boutiques are not capable really to develop AI capabilities. Okay, so that's the reality of the market. Except if you are a pure AI engineering firm, right? So in that case, it's possible, but otherwise, most of the niche players are not capable to do so. So yeah, we did many acquisitions like this. Sometimes there is also some kind of a gap between the market perception and how much it has been contributing to the revenue of the company as of today. The total revenue we combine, we acquire like over the last 10 years, it's representing less than 15% of the total revenue. Okay.
Okay. Wow.
So it's not so big. I mean, like in terms of and because the reality is we have been helping most of them to grow after the acquisition moment. Okay, so that's part of the reality, and there are multiple factors for us in the sense that when we want to do an M&A operation. I think in your deck, I don't know if you're going to attach the deck to the podcast, but you identify most of the good reasons, right? So I would say some factors are more like it's also a question between like, can we build or buy? Okay, it's always the question for me, because in terms of capital allocation, like in any other business, it's always this arbitrage between building or buying. So typically, when it comes to AI, I made the clear decision to build, and we did no acquisition in the space of buying for AI and data. Okay, we have also another brand which is called Sia Experience.
Yep.
In this context, it was more like a defense move, because we were feeling that we were starting to lose some business because we were having no capacity on the creative front. And I'm sorry to say that, but I'm more an AI engineer by background.
Yep.
So I was feeling like, can we build this type of creative business, or should we buy? And frankly, I was feeling like I'm not capable to build from scratch such a business. So we decided to make a couple of acquisitions in the mix to diversify our presence. And I was referring just before to agentic commerce and all that stuff. And I can tell you, like, we are winning every week projects on agentic e-commerce.
Wow.
If we were not having this capability in our platform, we will not be in a position to address it. Okay, that's very clear. So it was a defense move. Earlier also in this discussion, I was mentioning in the US market, sometimes you have like a barrier of entry, which is the MSA. Okay. And it's always coming back to the decision of building or buying. If you say like, okay, I have 3 years ahead of me to work with I don't know, like a Google, or could be a ExxonMobil, or okay, you have 3 years. You can recruit like 2 or 3 partners to invest in this and to try to get an MSA, to create the presence in the boardroom at the executive level and all the stuff, the regular stuff, right? But I can tell you it's going to take 2 or 3 years. So do you want to make this decision with the level of risk which is inherited from the onboarding people, which is also creating a cultural issue potentially? It's not so easy also to recruit people and to add people in your management team. We have today a bit more than 200 executives at Sia, right? So, and it's not easy to add new executives in the mix. And sometimes doing an acquisition, it can be easier because also these people are also coming with a book of business. Okay, depending on the markets, you have like the non-competitive factor, right?
Sure.
So which is
Yep.
creating like, and so I've never been a big fan of doing team lifts. So which is common in the industry, right? So
Yep.
because you have a potential legal issues, you have like
Sure.
which is also slowing down the company. And so for me, coming back to the arbitrage between like building or buying, it's also related to the acceleration we need to have. If we feel like it's super strategic for us, if we feel like we need to have like a stronger presence in this market or in this capability, yeah, it's part of the equation. And then you have to be a hybrid in, because it's not because you are buying that then you have a sequence when you need to build, right? So, and that's what we have been doing. Typically in biotech, we acquired a company, I think it was like 3 years and a half ago in the US. It has been fantastic. We have been growing the revenue by 60, 70% since with the acquisition.
That's
And
Latham, is it? Is that
yeah, with
Latham
Pete.
Biofarm?
Pete
Yep.
is a fantastic guy. And, and, but when you are a regular consulting firm, like, can you penetrate the biotech space? It's not so easy. It's not so
Sure.
easy by building. So yeah, on paper you can say like it's possible. So that's why we decided also to raise an equity check from Blackstone to accelerate and to allocate more capital. We raised 250 million of euros, right? So 1 year ago, and it's one for one factor. So it means like we have more the capacity to invest more than 500 million because we have like the free cash flow coming from the operations. We have also senior debt in addition to the equity check. So frankly, it's more than one for one, right? So we have now the capacity to accelerate if we want and when we want, to be part of of what I'm calling like that. It's the Davos Club. We are in January, and in a few days from now, it's going to be the big conference in Davos, right? And if you want to be a knowledge partner of Davos as a consulting firm, yes, you have to spend some money, right? You have to spend some dollars on it, and it's only accessible for the companies that are generating more than 1 billion a year, right? So that's pretty simple. That's basic math, and so we want to be part of this club. Okay, to be a global platform, you have to be part of the Davos Club. So that's why we. It's sometimes it's a factor which is ignored. Is there is a big capex related to branding. Okay. Yeah, it's a combination of scaling, capabilities, innovation, and all this stuff. But branding is very important. So it means that sometimes you need to invest at the global level, but also in each market where you are, and to reach a minimum of critical mass in those markets to have the brand awareness, the brand recognition in those markets. So that's pretty much why we have decided to go along with a financial partner.
That's really interesting because I don't know if you saw the last slide on my deck. It asks my MBA students, what would you do? So you've got this, £250 million to grow. And most of them actually came back saying, well, listen, I wouldn't change anything. I'd keep going, keep making good acquisitions, keep investing in tech, which I think is a good testament to what you're doing. I'm not saying they're experts, but they're good students. But the branding bit is something that we haven't had much attention on, and there is a different level once you get to that stage of where you need to be present, and the cost, the investment that you need to make that happen.
Yeah, because like branding is directly related to the cost of acquisition of a new client, because it's also a factor which is impossible to measure in our industry. But I can tell you the cost of acquisition in the B2B space, especially in the consulting world, is pretty high. Okay, and branding just basically the stronger is your platform, the lower is your cost of client acquisition.
Yeah, great.
Okay, and it's part of the equation too. So for us, yeah, typically going back to the US now, if I can tell you like we have been adding in our client portfolio right now in the US. We have like a bit more than 250 clients. Most of them are pretty big clients, right? So part of Fortune 500. So now we can spend less on acquisitions to get an MSA in place because we can run in parallel this very painful and admin work getting MSAs all the time.
Mm.
They are increasing like the premium of insurance, like cyber security, like is a big topic now. And now we can run in parallel all of this. So when you have the platform, the branding, it's reducing the cost of client acquisition, which is totally fundamental in our business and always ignored.
Yep.
You
Great.
never see that in the balance sheet. You never see that
No,
in any deck for an M&A. No one is coming with the cost of a client acquisition. But
no, it's a good point.
That's the key point.
So really, I will feed that back to my MBAs. So thank you. They won't believe we've had this conversation. Thank you. Matthieu, thank you so much for your time. It's been a real pleasure listening to you, but also watching the growth and success of Sia over the last 20 years. So thank you so much for your time.
Thank you, Joe, for having me, and happy to continue this conversation, like maybe in a couple of years from now. And I'm sure we're gonna have tons of these topics to discuss.
That would be amazing. Thank you.
Thank you,
Bye bye.
Joe. Bye bye.